blessings accrue. Hey, who you talking to? Just know I ain't no regular fool. Could be anything in the world, but I can never be you, because I stand tall like I'm on my tiptoes, baby.
Good morning, everybody. You're watching SmallCapSteve live. We're live on Twitter, Facebook, LinkedIn, Twitch, and probably missing one of them, YouTube. That's it. Appreciate everybody joining us. We got a big guest today. We got Hoffmann joining us from SOAR Financial. We're going to get into all the big mistakes that we've made investing in junior mining. We've been burned a few times. Going to bring up some of those stories and get Kai's thoughts. Maybe get a sense of where he thinks some of the mining capital flows are moving right now. Pretty exciting topic. Maybe later we'll get into some of the Canadian venture and junior market news. So buckle up. Let's get started.
Mess up the mood. Yeah, ooh, I work too hard for it.
Kai, thanks so much for joining us today.
Hey, it's great to have you. Great to be on. Appreciate the invitation there, Steve.
Did the intro throw you a little bit?
Did it throw me? No.
It throws me because it's kind of like what's happening here. I don't know. It's a little strange to me when I see our intro and we're kind of talking. Anyways, so we're talking offline actually a lot about sort of the production and how we've kind of got onto this YouTube stuff. Now we're, like I said, doing things like putting this intro on where it's kind of like I'm still sort of a little bit confused when I look at this, because we used to just be written guys. We used to just, blog and talk about the stocks we liked. I don't know a whole lot about your background, but I know that you're in the space that we're in. You invest in juniors and you do a little bit of sort of investor communications. Is that right?
That is absolutely correct. Yeah. Been doing it for over 12 years now, originally out of Germany. I moved here to Vancouver about 2 years, 4 months. With the pandemic, it feels like yesterday. So been a while now, but we're closer here to our clients, closer to the audience. And as you said, we went digital there as of last March already. So we've been live streaming, and it was fun nerding out with you a bit before we started going live here. That was great.
Yeah, so how did you get into junior mining? Is this something that your family was in, or did you just kind of find your own path? And what's the story?
Good question, actually, because in Germany you don't grow up in mining really, like unless it's coal mining or so. That's the only sort of aspect we still have left in Germany. And there's only 2 universities. They're actually really well known, like at Freiburg University. I think there's a second one in Aachen, I think, that has a really good geology program. But you don't fall into mining, and especially not the line of corporate communications that we are in here. But to be quite honest, it's dumb luck. Actually, I thought I'd end up in telecommunications or Web 2.0 services at the time. I did some internships for Deutsche Telekom, and didn't work out that way I wanted it to. Like after university, like at the time, like in lots of your viewers can probably relate, like all I was offered was an internship. I was like, yeah, that's not happening. Right. I'm not doing the internship route. And I was offered a job at a finance boutique, at a corporate finance boutique. And never thought I'd end up in mining or finance. And one of the deals we worked on back in 2008, 2009 was actually a rare earth deal. And took it to conferences in San Francisco, here in Vancouver as well. And that's where I sort of smelled blood. Of course, timing was great. So I made a bit of money actually during the rare earth boom. The stock has performed well that we worked on. And that's how I started out. And at some point, there was a logical progression in my careers. Like, what do you do? Like, either you go client side or you start your own shop. Because in Germany, I think there are 3 other companies that do what we do in terms of corporate communication. So it wasn't really a choice to join a competitor or so, because they're all one-man shops. So so we started SOAR Financial in March 2011. So we just had our 10-year anniversary, actually, officially.
So 10 years in junior mining. Obviously, there's been some good times and some bad times. It feels like for the last decade, from our view of looking at junior mining, probably a lot more bad times than good times. But you've stuck it out, which tells me that you've managed to make some pretty smart, thoughtful, successful investments. What areas were you investing in, let's say in like 2012 to 2019?
So I was cutting my teeth back then, right? So
Okay.
back then I didn't know anything. If I look at my client list, I'm almost embarrassed about it nowadays when I look back, right? Because we all learn, we grow up, like we meet different people, we grow with the people we meet. So I'm quite happy with the companies we're working with right now because it's different caliber. Like I'm really excited about, and also the people we know, the people we talk to, like we're in Signal WhatsApp groups and stuff. So that has changed completely, right? So it's a good learning process. So like it wasn't easy. Like I wouldn't say I've been an investing genius or anything. I don't think I've made any money investing actually until like the last 18 months. Quite honestly, of course, there was the win here and there that kept me afloat, and like my personal portfolio was underwater most of the time. Like when I look back at 2015, I was almost wiped out, right? Personally and professionally, like just the market wasn't there. Like you're still learning. Like I've been in the business for 4.5 years. I think I had one client that saved me at the time. And that's of course changed. Like visibility is different. Been working in this industry, as I said, for 12 years now, over 12 years. And that's what's changed. So you know different people, and you get to get just a better feeling for the sector in general as well, and the people you can work with and trust, of course.
So you're originally from Germany. You're now kind of working in the Canadian junior markets. Something we always hear about, and I don't really know a whole lot about this area, but that there's a lot of Germans like to invest in Canadian junior companies. Why is that? Why do Germans invest in Canadian small cap and micro cap stocks?
It is interesting, but we were still burnt children of hyperinflation back in 29, right? So gold has always been sort of in our DNA, and we like the returns, like as well. Like it's a good combination of generating high returns, of course, high risk associated, but with the gold kicker to it. So gold is always going to be popular. Like in 2015, actually, I strongly believe that the German market carried the Canadian market in terms of junior mining. Like not necessarily in terms of financing, because our hands are a bit tied in terms of getting into a private placement, but definitely in terms of volume on the market, that little bit of volume that was there, quite a bit came out of Germany at that time, or German-speaking Europe, most of it.
Do you think that like, we always hear about it in the context of like whenever we're invested in a company and we talk to some of the people who are behind it, they're always like, oh, you got to get a good German newsletter writer on a stock. How important do you think that is? And is that sort of a service that you guys do at SOAR? What's how does all that kind of world work? If you can speak about that a little bit.
There are two worlds, and it depends on which world you want to live in.
Okay.
Quite honestly, so there's the paid for side, right?
Okay.
You can blow your brains out spending 6-figure budgets on paid for newsletters and coverage, which is fine. Like there's a certain validity to that. It's not the side we live in, which is so we make more introductions to proper newsletter. No, that's the wrong term. To newsletters that don't charge for coverage, journalists, and they make up their own mind. Of course, we can talk to them and point out the positives, but in the end, it's up to the journalist and their editor, for example, to accept a story. Right? Yeah. Those are really impactful because they're trustworthy. And like coming back to the dark side, actually there is some validity. If you manage to actually let's say pump the share price to a certain level, but you actually finance at that level and you get some money in the door. So there is a cost for dilution as well, right? Yeah. So, and it all depends. There's a validity for pumping stocks. And Germany, of course, is a very retail heavy market. Like we don't have a lot of institutions. And it starts with that we don't have any brokers in Germany. So we don't have the Haywoods, the Canacords, the GMPs. We don't have them. So people have to find their information from newsletters or online websites or online forums, I was going to say. And that's why they're so powerful. So having them in there definitely helps with retail. Our approach at SOAR Financial is a bit more focused. Like we don't go broad. Of course, we host our conferences, which is more of a broader audience. But when we do our roadshows, it's all very focused on highly qualified, either smaller institutions, because we don't have the big institutions. We don't have the $1 billion VanEck funds and stuff. We don't have that in Germany or in Switzerland to a degree. But we do have great family offices that are interested, or high net worth investors that are following the sector very closely.
So without the broker model, how exactly do placements really work in Germany?
They don't. Let's be honest. Like there's a certain group of highly sophisticated investors that either already have a brokerage account in Canada. There are brokers that easily deal with that. It's not a big compliance thing. It's not like the US where you have to be SEC regulated, compliant, and have to take a zillion securities courses. Or you just need, I think best is you can participate, but there are a bit more hurdles. And in Germany, if you take the share certificate to a local regional bank, they often look at you like a deer in the headlights. They don't know what to do with it, right? So, and that's the complicated part. And then especially retail, as you all know, retail usually is of the older generation. It's not the 25-year-olds that are necessarily participating in placements, and that turns out to be an additional factor that contributes to that.
Yeah, it's
really interesting.
Go ahead, Jay.
No, sorry. Go. You're probably going down the same avenue as I am.
Yeah, so in Germany, people are primarily using online discount brokerages, kind of like like a TD Online or maybe a Wealthsimple kind of thing.
Exactly. So we have the FedEx and cap traders and all that. You can trade really cheap now on Toronto as well. So for me personally, I never look I should be, but I never look at the Frankfurt listing. Yes, we help promote or support companies in the European German-speaking markets, but I don't look at Frankfurt. Because with the online brokers, you can trade on the Toronto exchange, which is usually more liquid, shows a better bid and ask for pennies more, right? So, but it is a piece of the marketing puzzle to have a listing there. It's an outlet. So I'm not denying that it's valid. I would be shooting myself in the foot, but it is there. It's good.
Absolutely. It's part of managing your cost of capital, is making sure that the investment community, where there is investment appetite, is hearing about a story. It's just from our perspective, whenever we do hear of companies associated with German companies, it's always the names that we're a little bit ooh. But that, again, we don't really know anything about this world. That's just our experience. Okay, so let's talk a little bit about your actual investment criteria. A story I like to tell is that Jay and I invested in a gold company probably about a year ago. They were in the Philippines. They talked about how they had these huge swarming veins, and you looked at the investor deck and it was okay, there's some low hanging fruit targets where they're going to hit some big intersections, and we don't know how people are going to feel about investing in the Philippines, but they're going to put up some big results. So first off, we're in the first tranche of a private placement. We wait 2 months for it to close.
I think it was at least 3 months to close.
Yeah, and then it just kept getting bigger and bigger, which meant more dilution and more dilution. And then the drill results were supposed to be done by the summer, ended up being later in the year. I can't remember if it was December when they came out.
Yeah, I think they were released in January of this year, actually.
Yeah,
it was just delayed all around every single item.
So we get these drill results, and they just hit all dusters. These swarming veins we were told about apparently didn't exist.
It wasn't even dusters. There was just nothing there. Yeah. Truly.
So how do we avoid doing this in the future? Do you think that we got a little bit too greedy and caught up in this idea that this stock that's trading at a market cap of sub, say, I don't know, $10 million, that they're gonna hit it, and it just our criteria should be things that are a little bit more proven. How do you look at junior mining companies that are sort of early stage and decide whether or not it merits investment?
Oh, that's a very long discussion to be had. How much time do we have? No, it's. I just want to quickly. I saw a question pop up here in the chat real quick. I just want to go back to that real quick to the previous part, and then I'll answer your part.
Yeah.
And it's about the capital gains tax in Germany, and it used to be that you could hold for over a year, and then there were no capital gains, and that's why German shareholders are still very, very loyal. There's a certain mentality, but that was abolished. I think it feels 10 years ago, might have been 7 or 8, but there's capital gains tax of 25% plus some change on top of that. So that has changed. Okay. So since I saw that in the chat, so I just wanted to address that real quick because it was fitting. But how do you pick a junior mining stock? How do you pick that like that? It is very, very tricky. So I'm assuming you're also in the Canadian small cap space. You have a very high risk appetite.
Yes.
Right?
Yes.
So that's already a completely different approach to what I would recommend generally, right? So you have that risk appetite. So you can play in the sub 10 million space. Mm-hmm. What you can do though is and that's what I meant by earlier. I've got the experience and maybe the network now that I can reach out to geologists I know. It's hey, can you take a look at this? And and oftentimes, and the number one aspect, and we talked about this briefly offline, is obviously management. Right. So for me, it's a 1A, 1B situation. Like it's more on the B part, because if you're new to the sector, you don't know how legit management is. You can do a brief cross check. Like I've seen one company recently launched that management had no mining experience, but they used to run an esports company, they used to run a cannabis company, and or something else, a biotech.
What could go wrong?
Like that, right? But no, like at least C-level didn't have any experience. Of course, at some point you hire a geologist, and you just pray that the guy is godlike and finds whatever you're looking for. But like that's sort of a giveaway, because that means they might not have the necessary connections to institutional money. So that's maybe a small red flag that you should keep in mind, right? And of course, you never know, and the slides don't tell you that who's actually behind the deal. And that's why, I mean, management is a 1B situation for newbies, meaning you don't know who are the deal makers. And in junior mining, that's essential as well. Like, who owns the shares? And like I've read a funny statement. People actually do spend more time on either finding a new car, buying a barbecue, whatever it is, than doing research on stocks, right? So, and as I said, that's what I mean. Like, I can go on and on and on, but one very simple step for me, if I don't know management, and I usually only invest in management teams that I'm close to, that I know personally or at least met before, right? But if you go to CEDAR, that's the Canadian Regulations website. It's a terrible website. I think it was designed in 1992 or something like that. But,
we love it. The fact that it's a terrible website makes it an advantage for us, because we know where everything is.
And it's flipping fast. It's not overburdened with unnecessary graphics. So it's actually fast and it works, right? So that's fun. But my point is, you can actually go into the MD&A, or I actually also love the AIF. That's the annual information form. And you can look up previous share issuances. And one thing, like, especially if it's a new company, like, how much did they actually pay for a property? Where did they get it from? How much, like, what did they have to give up for it? And where did the shares go? Like, we could go into such deep rabbit holes here.
That seems like such a big part of junior mining, because we know a lot of the deal makers, and usually that's how they get positioned into these sort of things where it's like, okay, we're gonna go buy a piece of property in, I don't know, Newfoundland or somewhere in Ontario or Quebec, and then we're going to put it into a shell, and they might pay like $100,000 for this property, but then it gets vended in at like a $7 million valuation. Is there a way to find out how much the deal makers actually paid for the property?
It's got to be in the filings.
Okay.
Like the truth is really in the filings, because you can't hide it from the regulators. And I've seen one option deal last night, actually, that has a lot of question marks on my forehead. And I'm sure you can find it if you want to look it up. And it has a really distinct ticker. So now you definitely should know who and what company I'm talking about. But that option deal has my head spinning. And it's halted for a good reason, in my opinion. So I looked at the press release, and there's no mention of who the vendor is and the valuation, the money they're paying for that project. And the project is in the Yukon. I'm not going to say any more than that, because now that's a dead giveaway.
Actually, I think I had someone write up something on it yesterday.
Right?
Did we cover it?
We didn't cover it. It's something that
I just saw the press release last night at like 9 p.m. Like, I like scrolling through press releases that come out after market, because there are usually some fun ones in there, some head scratchers. So especially on a Friday night, if you want to have some fun Friday afternoon.
You're speaking my language.
Right? That's where you can learn a lot. Like, it takes time, but if you read those press releases, and you can go down rabbit holes there, right?
Oh, easily. I mean, I've actually, Steve tells the story, because there's more than once I've been sitting at the cabin, 11 o'clock at night, Friday, sitting around the fire, and I'm on my phone on CEDAR going through filings, because it's just the best time, right?
Yeah.
Yeah, it's endless.
Yeah, that's the best time to bury something. So what's your top mining invest? You don't have to give us the name of the company, how much you made or anything. I'm not asking that, but just in terms of process, where you looked at an investment at its stage, you evaluated it, and based on your process, you said, I really like this risk reward scenario, and it actually like ended up being fruitful and worked out for you. Is there anything that sort of stands out that you can kind of talk about in terms of what you liked about that investment at that time that met the Kai Hoffmann checklist?
Yeah, no, that actually, I'd be happy to give a name as well, like, because I've used it vocally before, so it's no problem. And the company really is Minera Alamos. So I'm not sure if your audience knows the company, but it's a Mexican it's a Mexican-based, or it's a Vancouver-based company with Mexican projects. And for the longest time period, the stock was stuck at 10, 13 cents. Really had a hard time running. And I do own options. I do own shares in the company, so I'm hugely conflicted, obviously. But it's a great example. Like, I did my process. I liked management. They're fantastic. They have the technical know-how. They know how to build a small-scale mine, meaning up to 70,000 ounce production, right? They have that experience. They've done it before. Management is very trustworthy, very approachable, very open. So management box is easily ticked. I've had a relationship with them. So that's out of the way. Then you look at the project. I've been to the project myself. Not everybody can do that. Yeah, exactly. So, but if you go on the 5-year chart, exactly. So, and if you look at that around that time, like 2019-ish, that's sort of when we came in, like 2018. I don't actually remember the exact date. But what I was getting at, it had a messed up capital structure.
Okay.
Right. It wasn't ideal. It had a ton of warrants outstanding because it merged with a company. They brought in a lot of warrants at the time, and there was massive overhang. So the company was stuck for the longest time at 10, 13 cents. And it was easy. It's like, even for the unknowing retail investor, if they would have done a little bit, like in 5 minutes due diligence on that company, they would have come to a very similar conclusion. Like, you could have driven a huge bargain. And you as excuse me, the stock is at 64 cents now, but it was trading as high as, I think it's 80 cents or so at some point it ticked. And you could that was very easy money.
So at 10 cents, why did you like it?
Outlook, I knew the warrants were expiring fairly soon.
Okay.
Right. So over 80 million warrants expired. And there was a massive overhang. The stock didn't break through. They had a very clear path to production. Financing was never an issue. They were backed and are still backed by the Osisko Group. So name, people, just ticked a lot of boxes. Financial risk was more or less taken care of. So that was it's tough saying that, and I should be saying that, but that was as close to a no-brainer as I saw in the last 2-3 years, and it's paid off. Like, with very low risk, actually, like in terms of junior mining is full of risk. But like you could really minimize it in that regard, because you could tick all the boxes. Like, if you have a checklist for it, like, as I said, financial risk, people risk, project risk to a degree. Yes, they're building a mine without a resource, so that's, you got to believe in the team that they can do it, but they've done it before, so there's a bit of trust. You got to put that in. And then, of course, the markets played ball as well, and the stock shot up to 80 cents, right? So that was, of course, a big factor in 2020. But even at 30 cents, I was hugely happy with what I picked out there.
Now, with mining stocks, do you tend to have a very long-term horizon, or if you end up with like a 5 to 8 bagger, are you kind of like, this has been great, I'm on to next to trying to find my next Minera Alamos at 10 cents, or do you keep following the story and supporting it?
It's both, actually. So I'm not a trader, right? So I don't day trade. Of course, I'm foolish enough to open my TMX power stream every day, which just makes me nervous, but I know I don't trade. But it's unnecessary. Some days I actually managed not to open it, and it feels great. So I haven't opened it yet today, so I actually don't know what the share price of each company is. So which is fantastic, because I'm not a trader. So I of course look for companies like Minera Alamos, but I also own quite a few later stage projects that didn't buy early on. Like I recently bought, and I'm happy to name the companies, like Orezone, Liberty Gold, for example. I own quite a bit of Ascot as well. Those are later stage projects. I've got a couple more in my portfolio, but those are companies I buy in the market. I have no special knowledge. Yes, I know the management. I've interviewed them. They were on my conferences. But that's more development story. Like, if you want to have some leverage to upside to higher gold prices, production stories usually get a re-rating. Like, the average is actually 127% of a re-rating once companies go into production. So that's something I play as well. But that's a longer term investment. That's not something I flip tomorrow.
So you have a network of geologists you can go to when you have a project that you find interesting. Now, the one thing that Jay and I have found with the geologists in our circle that we talk to is that they tend to think that every project that isn't theirs is crap. So it sounds like you've got some geologists that you can turn to, and do you ask them maybe specific projects about grades or about like the rock formations? How do you go about approaching the geologists in your network with questions?
So the problem with that is that knowing too much sometimes is not ideal either, right? So like I've actually missed quite a few companies run up because I thought I knew more than the average investor, right? Because maybe I knew who was behind it. I thought, oh, well, this area is not going to work because of political risk or something like that. And all of a sudden, the stock's been up 500%, right? So I'm not all knowing. My geologist friends are not all knowing. I don't have a consultant geologist on staff or anything, but we do, like, let's, for lack of a better term, and we shoot the shit on WhatsApp or so. And we say, hey, what do you think of this project? And then I usually get a small blurb back, little pointers that you can look out for, and then you can make up your own mind if it's worth the risk or not, right? So, but if there's a clear no, then of course you stay away from it. Like, because I'm not a geologist, I'm not an engineer. I go off of like gut feeling. For me is the most important thing I've learned to refine over the last 12 years. So I don't have for me personally, I don't have a checklist that I go through and tick every single box.
Mhm.
It's really, it comes down to the gut feeling, but mentally, of course, I check those boxes, and geology is a part of it.
So you had mentioned that you've done site visits in the past and everything else. How important is that to your investment thesis, being on site, and what specifically are you looking at when you are on site?
So for me, it's two things. A, of course, I try to visit all my clients' projects. Like the last 12 months, I've actually taken on clients that I haven't visited the project yet, and that personally hurts me. And that they're actually in Canada as well, but I can't go out to Newfoundland, for example, right? So that's a bit tricky. But for me, it also helps me tell the story as a corporate communications. I'm supposed to support the companies, right? It helps the narrative because you've been on ground. So the PowerPoint doesn't give you the full picture. Like Google Maps might help, but it is the interaction with locals. Like if you're in an area like Peru, for example, like how open are they to mining or exploration in the area? It oftentimes is just that small, like the pickup truck that drives by the property, stops, waves at you, says hello, smiles, continues on. Right? It's those small things that I look for on a site visit. Another one is a really good example. I flew to Botswana like 4 or 5 years ago to visit a client in a project, and I knew nothing about Botswana. Like it's one of those countries that has a very, very good reputation, but it's not really known. Like nobody knows about it. And for me, the most important thing was how civilized it was at that time. Like it's not like Tanzania where you have one lane going one direction, but 3 cars next to each other. Like people actually stayed in their lane. Right. And like those are the things I'm actually looking for. Like, what does it mean? Like, and that often tells you a lot about what's happening afterwards. Social risk, political risk, right? Those are the small things. And I'm not a geologist. I can pick up rocks, but what I do pay attention for is there a farm at the end of your project that you need to buy? Like, what does that rancher say? Like those things I look for. You don't see that in a PowerPoint.
Got that. That's really interesting because I've always wondered, like, if Jay and I hopped in a plane and we went to go look at a project, what would we do once we're there? Like, they're just going to take us to like a field,
a quick 30-second tour, and yeah,
and then we're like, okay, well, like, what do we ask? What are we diligencing here? What would be a part of our process to actually get some value out of this experience?
Yeah, but it's also people, right? So, like, how do they deal with staff on the ground? Like, and for example, here in BC, I'd love to go on a project. Like I visited a couple projects, but one I've visited a couple times. And what was really great to see, like, how do they interact with First Nations, for example? And they have First Nations on staff. Like, how do they interact? How are they part of the corporate culture? How are they included? All right. That's also something you want to see. Like, it doesn't come down to the rocks. For me, like, as I said, I'm not a geologist. Like, of course, there are obvious targets. You go down a shaft, you see the quartz vein with gold sticking out of the wall. Well, that's kind of obvious. Okay. But, the rest, it's around it. Like, what's access like? Do you see a power line going over the project? That might not have been clear to you, right? Those things. And that's where you get a way better feel for it than whether management actually talks sense.
Okay, let's talk briefly here about Oren Inc. This is a sort of a website or database that you offer as a service that tracks all the financing activity in the mining space in Canada. Is that accurate?
That is very accurate. Yeah, it is. And I bought that company in 2016.
Okay.
And it's a fantastic little tool, actually. And I don't use it enough to track financings with attractive terms, right? Because those 5-cent financings with a full warrant at 7 cents or so are really juicy. And you can mix them in, right? So from an investor point of view, it actually is a lot of fun looking at some of that data. It can be frustrating as well, especially when you see flow-through financings offered at a discount. Then that's a big red flag as well. So it's a part of the due diligence tools as well, I guess, right? But what we do is, like, we track all financings in the sector. I mean, exactly, that's the website. We look at companies below 1.5 billion market caps and financings below $100 million. So really geared at the junior end. And what makes us a bit unique, everybody can track financings. We have the Oren Inc index, where we showcase every week, actually, every Monday we come out with the Oren Inc index, and we show how healthy the market is. Right. So if you click on that one there, for example, yeah. That first one, it shows like the last 12 months and where we're at in terms of level of healthiness in the market. So I'm just looking at it as well while you're pulling it up here. And but it shows you like how healthy is the sector and where's the money coming from to a degree. Like we don't track who the investors per se are, but we showcase like if BMO is leading it or Canaccord, but also the commodities. Right. So the last 8 weeks, actually, we've seen quite a few copper deals, uranium deals, and deals outside of the gold space. It's almost dominate our index and then continue to have a higher score. So it's not just gold driven. And that's also interesting to see and something we showcase here.
Oh, this is amazing. I actually, for nerds like us, this is like, have you seen this before, Jay?
No, and I'm kind of wondering why I have not heard of it because this looks amazing.
Yeah, and is there a fee to accessing this? No, it's free.
No, it's like, of course we don't provide you our Excel sheet with all 35,000 deals in it, but it is free to access. Yeah.
Oh wow, this is something that I'm sure we're gonna a site that we'll be going to regularly moving forward as we try to track flows in the space. Is there anything you can speak to in terms of where you're seeing capital flowing right now in the mining space?
Yeah. So as I mentioned, I think of course the bigger companies, like companies like Ascot. Like I just have Ascot open, that's why it's top of mind. They were raising 55 million this week. So the developers, larger companies still raise most of the money, of course. But as I said, like copper companies actually, or uranium companies, we've seen Denison recently raise, I think it was $98 million. So there's quite a bit of money flowing in there too, as a bit of a rotation maybe happening in that sector. I'm just looking at the last closings as well. But Northwest Copper raised $13 million. Argonaut opened a $10 million financing. Giga Metals raising another $7.5 million. So that nickel battery space or base metal space, I think, is attracting quite a bit of attention right now.
Do you think we're too late for uranium? Obviously, you're not giving financial advice, but would you still be looking at uranium names here, or what's your take on uranium?
I actually don't follow the space too closely, and we've actually been having a discussion internally here. For an energy conference we're organizing, and I have a hard time coming up with good names out of the uranium space, like companies I would wholeheartedly trust, and there's not very many, right?
That's kind of my issue too. I mean, I'm actually based in Saskatchewan, so I mean, we got all the uranium guys here, but it's so dominated by like the juniorest of juniors that you just don't know is really how I kind of view it.
And
right, so.
And you have Kamiko, you have Orano out there. So, like, what are you going to do? Like, so the best one, obviously, is Next Gen. That might be the only name I'd be seriously looking at, because I also look at the exits. Like, what's the next step? Of course, if you want to play $35, $50 uranium, you can pretty much buy any junior, then it doesn't matter. But if you want something that survives, I think Next Gen, and I actually don't know the other companies. Like, I've interviewed Next Gen, and that they're clearly the leader from what I've been seeing on Twitter as well in the sector. So either they're a takeout target or they're going to build it themselves. So that's the only name that really comes to mind.
Yeah, there's a few others. Like there's Azincourt, which is very much a junior. There's Fission. Fission has a decent management team. Their CEO is he's accredited with finding some other plays for Cameco and stuff. So there's some experience there, but yeah, as a whole, it's not nearly as well developed like you see in the gold sector, where there's a number of names you can follow, right?
Well, and $30 uranium, or even less recently, like $25, didn't really entice a whole lot of exploration.
Exactly. Just wiped them out.
Yeah. So, and I think Denison just bought 2.5 million pounds of uranium as well, and they're planning to become a producer. So I have to look closer into that one and why they did that and what the point of that is as a developer buying uranium instead of producing it themselves, right?
There's a few that have actually done that. I know Cameco has been buying too, and yet they've shut down their own production because they can just buy it cheaper, right? So it says enough for the sector.
Yeah, it's like that. Yeah, exactly. A bit of a head scratcher. Like, I'm not an expert on it, but that's sort of the headlines I'm reading on the sector, and that's what I'm voicing here.
So Kai, you've been really generous with your time here. Where can our audience go if they want to find out more? We've got OrenInc.com. Do you have any other sort of newsletter services or areas where our audience can go to find out more about your thoughts on mining?
Yeah, we're quite active on Twitter, so we do host almost daily live interviews as well, with companies primarily and experts. So it's at SOAR Financial.
Okay.
on Twitter, or at Oren Inc. That's where mostly we post our.
And we put your Twitter name is actually in the tweet that this video is on right now. So.
Oh, okay. Hold on. Let me retweet that. I don't have Twitter open right now, so which is usually open the whole time.
which I was on the fence about, is this Kai's Twitter handle? Because it doesn't say your name in the actual.
Yeah, it's like that's something
Twitter
I'm still
bio.
debating. Yeah, I'm still like, it has my photo on it, and it started with @Sor Financial. I think I just got a reminder that I've had that account for 10 years now, but I've only been using it for the last two and a half, maybe. So.
Yeah, I'm the same. I joined Twitter in 2009, and I had to come up with a name. I was like, you know what? I like small cap stocks. I wonder if there's going to be any small cap stocks on Twitter. Well, I need a username. Small caps. My name's Steve. I like small caps. Small cap Steve. And 10 years later, I'm on video on Twitter with a neon sign above me that says small cap Steve.
And all your buddies think it's because of your small head.
Yeah, all my friends think that it's because I wear small baseball caps. I don't hang around. My spare time is not hanging out with finance people. But Kai, you've been really generous with your time here. This has been great for Jay and I, just to sort of understand your process, and we really appreciate you taking the time to come on here and chat with us.
Thanks for inviting me on. It's fantastic. Steve, Jay, great meeting you guys, and thanks for the conversation.
Yeah, well, hopefully you'll come back on in the future as there's some big developments and we can get your thoughts on them.
What is it? $3,000 gold, right?
There we go.
There's a prediction. All right. Thanks so much, Kai. We really appreciate it.
All right. Take care.
Okay, so Jay, what's going on in the Canadian small cap news today that you want to talk about? We got 20 minutes, and then I got to drive to an investment bank to set up a account. They're telling me that I physically have to show them a physical copy of my driver's license to set up an account. So I got to take 2 hours out of my day, now that I live in the suburbs, to drive downtown, find parking somewhere. I haven't been downtown in a long time. Used to go 3 or 4 times a week, and then show a copy of my license. So let's get after it. What's in the news that you want to talk about today?
Well, there's two. One you will get riled up over, and I think that's going to be great. And the other is a company that's known for suing people that are critical of them. So let's do both. Why not, right?
Okay, which name's the first one?
Let's go with Control Technologies for the first one.
Control Technologies.
I've got the link here for you if you need it.
Oh, here, I just found it. Let me pull it up. I know that this is a name that is very controversial on the Twitter sphere.
Yes, and it will remain controversial. So the short of it is they released guidance this morning, perhaps sensing some weakness in their name. I don't know. They provide guidance for revenues of 33 to 35 million, and they also release unaudited revenues of 13 million for 2020. So this is all fun.
I love that you say unaudited, by the way. You're such a troll.
Well, they do say that in their news release, so you got to keep that in mind. Right?
You know what? That is actually a pro move on your part, because I now spend a lot of time talking with companies, and like my world was turned upside down the last 2 days arguing about a company that I don't love the way that they record their financials. And like this whole concept of how like a company can effectively put out whatever they want until they have to take it to the auditor is
a bit ridiculous.
Like I don't know if Ianthus ever saw or released any audited statements for MPX.
I don't think it did. I truly think they managed to skirt things around just because of the time of the acquisition and that. And like that is like there's something wrong there where like it was effectively a public company for a number of years with no audited financials. Like that's a problem.
Mm-hmm. Yeah. Okay. So what did Control Technologies? They put out guidance 33 to 35 million.
Yes. So
unaudited revenue. Sorry. Go ahead.
33 to 35 million for 2021 is what they're guiding towards, along with EBITDA in the range. Adjusted EBITDA in the range of 3.7 million for 2021. Adjusted EBITDA for fiscal 2020 is expected to be at 2 million on those unaudited revenues of 13 million. So really not much improvement considering revenue increase. However, here's the interesting part. the company for last year, put out pretty well the exact same guidance. They initially guided to revenues between 32 and 35 million for 2020, and EBITDA of between 3.0 and 3.7 million. I found this interesting because to me, they just regurgitated numbers. Like truly, they regurgitated it. That guidance was pulled after the second quarter because they point to COVID and everything else. However, when you actually look at the financials, the first quarter, there was no way they're getting to that 30 or 35 million figure. Holy shit, they got destroyed. I'll get into that. I will get into that. Yeah, just wait.
Okay.
So if you want to pull that back up, just so I have the numbers there.
Okay, you want the article back?
If you can, yes, please.
There you go.
So first and foremost, they recycled these numbers, and the difference is now it's a 70-30 split. They said they pulled forward numbers from 2020 that were supposed to happen and got postponed, and only 70% of that estimate for 2021 is to come from their what they call their core business, whereas 30% is to come from this BioCloud. As we all know, it's the COVID-19 aspect of the company now. So first and foremost, to me, that says that what they had initially planned for the core business, a lot of it has just gone away. It's just not there anymore. They said that a bunch of revenues were supposed to be recurring. We'll see if that plays out. That may be baked into that. I don't know. However, the most interesting part of this is 30% is supposed to be for BioCloud. So we'll call that roughly $10 million. I don't remember the number offhand, but at one point they told us what they expect each unit to be sold for. Do you remember what that is, Steve?
If our man Bruiser's on Twitter, he probably remembers.
I think it was like 10 grand or something. Was it not?
Okay. I don't remember off the top of my head.
I know the filter was $400 because I was so caught up in the whole, no one's going to replace a $400 filter every time it has detected COVID. It's just not going to happen. Mm-hmm. Anyway, this company has been saying we can produce 20,000 units a month. Well, their guidance says that they clearly are not expecting that at all.
Mm-hmm. Well,
that's why it's down 20% right now, because people are going, whoa. Like, we thought we were going to sell every unit we made. Well, that's clearly not what's happening.
When I first heard about this name, by the way, I was like pretty amped up about it. I was excited. Like, this sounds really exciting. You're gonna detect if there's COVID in a room with a simple machine. But I
think I was the Debbie Downer on you for that one. I apologize.
You and buddy Mudruck on Twitter, Muddy's Money. I think it's at Muddy's Money. Yes. He didn't like it either, and I was just that's a case where I realized, okay, Steve, you're out of your element here, and I understood the skepticism. And look, I don't want to shit on small cap companies. That's not what I want to do here. But my issue with all these COVID names is that if you're not like running full throttle, making money hand over fist now, it ain't going to happen. Like, let's talk about the COVID numbers for a second in the US. You've got 30 million people, over 30 million people have had a confirmed case of COVID. 100 million people have been vaccinated. Obviously, there's going to be some overlap. These aren't mutually exclusive variables. And then they're trying to get another 100 million by the end of April or May. If you listen to the experts on virology, am I saying it right? Virology. Anyways, if you listen to them, they're all going to tell you that the number that you got to hit is about 80%. 80%. So, give or take, the U.S. is probably estimated to be at about 50% of people have either had a vaccine or had COVID. Based on there's 30 million people who have had it, so there's probably a bunch who have had it that haven't been in the confirmed numbers,
or asymptomatic, etc.
Yeah, so we're getting pretty close to that point. I would suspect that unless there's a new variant that hops in here that the vaccines aren't catching, and if you've had COVID before, you're still at risk. Yeah, susceptible. I'm not liking these COVID. I was saying that back in the fall, but if you aren't selling your COVID technology hand over fist right now, I think you're too late to the game, and that's not. I'm not picking on control on that. I think that's because there are a lot of these names out there.
Oh, there's absolutely tons. Now, test kits, something along those lines. I mean, we have clients that are in that, and I mean, the demand for test kits is naturally going to begin to taper off. Right now, is it going to disappear? No. And I mean, to be clear here, my understanding is that coronavirus at this point is never going to go away. It will always be here. With any luck, it is going to just mutate into effectively something along the lines of the common cold or the flu, right? The common cold is a coronavirus. But outside of that, with all these vaccinations, I mean, media still picks everything up, but everyone knows what media is like these days, right? It's just ridiculous. It's constant fear monger. So, I mean, it is what it is. I just don't see a path forward for a lot of these. And I mean, the numbers said it this morning with what Control put out. They're expecting 10 million from the BioCloud. Now, as far as I'm aware, they haven't announced any major contracts yet, so that may be a guesstimate at best. I don't know.
Yeah,
I'm assuming their guidance is based on something, though. But even still, right, like the demand for this, it's like you said, it's falling off a cliff day by day. Every vaccine that gets administered is another nail in the coffin.
Yeah, that's a pretty interesting way of putting it. But for the shareholders of the company, I hope it works out, and the company does sell a bunch of these. And but would I personally go along at this stage? We can kind of see why the name struggled a little bit. What's the next story you want to cover?
This is a story that's very near and dear to your heart.
Which one's that?
It's something that has ate at you for the last, we'll call it 2 weeks, I think, since it went out.
You're gonna send me the link, or you want?
I just sent you the link.
Okay, here we go. Oh, wait a minute. This is like Christmas for me. Curaleaf closes European transaction, immediately sells 31.5% stake to undisclosed strategic investor. What? So,
can you click that original link there? I've got it highlighted. Yeah, that's the one. So let's scroll down. This was announced. What day is that? Can you scroll up just a teeny bit?
Down?
Up.
This was announced
March 9th. Holy man, it's been that long? It's been a month? I thought it was like a week ago.
Time flies when you're having fun, baby.
So here we go. First and foremost, 16.8 million shares were to be Curaleaf. They acquired a European operation. We all in cannabis know what Europe means. It's a load of bullshit. Let's just call it as it is. They were initially to pay 286 million, which was to be paid 15% in cash, or 42.9 million, while the remainder is to be paid via subordinate voting shares. Contingent consideration of up to 57 million will also be paid. Fast forward. Oh, sorry. And if you scroll down, how much did Boris Jordan have a stake in this? He was invested in Measure 8 Ventures, which had an 8% interest that they disclosed. So already, both Steve and myself, you've probably heard Steve rant about it, but I
make it clear I hate Europe.
We hate Europe, and the related party aspect of it made things 10 times worse. This was also right before earnings, like 3 minutes before they released their annuals. So what were they trying to hide?
I'm going to say something here that if anybody's listening who invests in cannabis stocks, it's going to really help you guys separate the bad guys from the good guys, because there's a lot of like sell side guys who pose as buy side guys that are trying to help you all, or they're trying to help you. But really what they have is they have cheap papers and deals that they're trying to sell to you via using their Twitter and whatnot. And I'm not going to name names. You guys can figure out who you think fits that mold. But to me, the most obvious calling card of bullshit and people who are pretending to be buy side, but they're really sell side and they're selling you a bunch of shit, are people who talk about European deals positively. Just gonna say that, like, to me, that's a spade. Calling a spade a spade. I don't like Europe. It's all file the business acquisition report and I'll feel better. But to me, I don't like that they paid $300 million for a European transaction when, as Canadian investors, we saw how Europe played out, didn't like the transaction. And I don't understand all the support other than people who benefit directly from the support.
So the stock was trading at what, 2070, I believe, it says at the bottom of that release at the time. It's actually now sunk to the 18s. I don't know where it's at today. Originally, they were supposed to issue 16.8 million shares. Today, they issued 17.5. 17.5 million shares. I think I did the math, was $330 or 330 million Canadian. So in US dollars, that translated to 262 million when they're originally supposed to pay 282 in total. And then they paid cash of 50 million US. So they paid what, 314, 312-ish, when it was originally supposed to be 286. They just slid that in there. They didn't provide the total consideration amount. So that's already got me asking questions. And then after they issued those 17.5 million shares at the expense of shareholders, what do? They sell off 31.5% of this to a strategic investor, which I say in quotation marks. And they sold it off, just specifically that subsidiary, and that strategic investor put in something like 100 some million US dollars, and they effectively paid that $50 million in cash consideration. There was no need for Curaleaf to do this. They just raised like 318 million Canadian in January. So they had the cash on hand to fulfill this. So why did they have to sell this off after already diluting shareholders? So Boris Jordan got his 8% of those 17.5 million shares in his Measure 8 Ventures, plus everything else. And then immediately, right after those shares are issued, they go, okay, now we're selling off a third of this whole subsidiary to these other guys. Because we weren't skeptical enough about the related party action. They do this. Like, what? Why are people not questioning this bullshit?
Yeah, well, I think that if you're looking at Curaleaf, and look, guys, I'm not saying Curaleaf won't be $100 stock in 2 years, because macro trends are so strong for U.S. cannabis. They're in all the right states. They're clearly a top best-in-class operator. But, you know, I just get a little bit, frustrated when I see some of the stuff that happens in the space, because we saw a lot of stuff happen in Canada that, and the worst thing was if you dared to call it out like Nate did over at Hindenburg, you were considered a bad person. And look, the $0 price target. And like, honestly, I don't know, does Aphria generate positive cash flow after all these years?
I will say Aphria is one of the stronger names.
Yeah, okay.
Definitely.
But there still was stuff. There was still stuff that happened there that objectively anybody could have looked at and said, this is not really favorable for shareholders.
You want the last bit?
Okay. Is this on the original article?
What's that?
On the original article?
On today's article.
Okay, I'll pull it up.
So the last bit, if you scroll to the bottom, certain undisclosed options have been awarded to the investor to enable the 31.5% stake to be bought out in 2025 at the discretion of either party.
What does that mean?
So effectively, there's call/put options in place so that if the investor wants to sell out, he can say, hey, Curaleaf, you're buying my portion, which is how I understand it. Or Curaleaf can go, hey, we want our 31.5% back, so here's more money. Yeah. I'm willing to bet that it has a baked-in return of some degree.
Yeah, it's interesting. I haven't drank enough coffee to actually figure out what you're talking about right now.
Yeah,
this whole thing is just so bizarre. So they bought a company for like around $300 million. And then they sold a 30% stake of it like almost exactly a month later. And then they've also put a buy and a sell option on that 31.5% at the time that they announced this.
Which is valid. I think they can execute it in 2025. Okay. So basically in 4 years' time. It's bizarre to me. Like, so you buy this, you dilute the shit out of your shareholders that supported you. and then immediately you sell off a portion of that. Unless I'm misinterpreting something, like that's exactly what I'm reading.
Yeah. Well, I don't know what to tell you. It's these are the transactions that if you are invested in Curaleaf, you're probably spending some time trying to figure out whether you like it or not. If you guys have thoughts, please put them in the comments. Let us know what you think. I just can't wrap my head around this thing that quickly. All I know is I don't really like the European market, and I'd love nothing more than to get to see the actual balance sheet, income statement, cash flow statement, a business acquisition report for whatever the name of the company that they bought in Europe was. I'd be really interested to see that, but I don't think I'm going to have that luxury because I think that the transaction price has to be equal to 20% of the market cap of Curaleaf, which it is not, so they don't have to file one. The threshold, I suppose would be what, 2 billion at this point if Curaleaf's got a $10 billion market cap. So
is that what they're up to right now?
Yeah. Look, I mean, Curaleaf is a real company. They're a good company, from what I can tell. I just didn't like the transaction, so don't sue me. Just didn't like it. It is what it is. Okay, Jay, what's going on at the dive this afternoon?
Oh, this afternoon, who do we have on? I don't even know. Oh, we've got, if you want to go through who we got coming up, I will look into who I've scheduled for this afternoon.
So tomorrow we have Mark Chandler hopping on the show. And then on Friday we got Craig Hemke, who is...
that's who it is. We've got Craig Hemke on the Daily Dive.
So there's going to be a lot of Craig Hemke on the Deep Dive this week. We got Craig Hemke doing something with Cassandra, Craig Hemke doing something with SmallCapSteve and Jay in the morning. I love Craig. Really excited to have him on. He's got a huge following. He was one of the original guys who actually turned Zero Hedge into Zero Hedge. He was writing there frequently in the early stages under the username Turd Ferguson. He's somebody I'm excited to have on. So any other big stories coming out today or anything?
Well, we've got
consensus
estimates for Fria, which I know will be in demand. Other than that, we've got a bunch of macro stuff. I'm trying to get some stuff done for Coinbase, but my last 2 days have gone to shit so far. So we'll see if I get that done. I know that our producer's going to give me trouble already for not being done. So,
okay. Well, look, guys, nothing we talk about on this show is designed to be financial advice. It's not intended to be financial advice. If you're looking for that, so go find somebody who's licensed, not one of us. The show is for informational and entertainment purposes only. If you don't like what we have to say, let us know in the comments. If you like what we have to say, let us know in the comments. I want to thank Kai Hoffmann for taking the time out of his day to join us. That was entertaining. He's got a fantastic mic. Sounds like Howard Stern on the radio. There's that. I think I kind of sound like I'm talking into a tin can sometimes. Got to figure out how his mic works. Anyways, you guys don't care about any of that. You could spend your last hour staring at any screen, any place in the world. You chose to spend it with us. I appreciate that. We will be back tomorrow at noon with Mark Chandler. Thanks, everybody, and go Blue Jays.
Enemies, so please don't mess up the mood. Don't